Hello everyone, I have got Saj Hussain today here with us and I'm so excited to have a conversation with him. He is a very successful business entrepreneur with successful businesses and he has built himself a multi-million pound property portfolio. So definitely there's so much to learn of him, so stay tuned because it's definitely going to be very interesting. Saj, thank you so much for joining us here
Thank
today.
you so much for inviting me, much appreciated.
Thank you very much.
And I didn't have to travel far because it's in Birmingham, so it's always a pleasure.
Amazing. So I know that before you got onto property, you ran an IT business,
Yes.
and for about 14 to 15 years. And I also heard you say before that you lost everything through it,
Yes.
and then you got into property. So what happened there? How did you lose it all?
I guess I started in my 20s when I was still at university. We got involved in tech at that time. This is early days of computing. 286, if people remember that sort of time. 286 computer, 386 were just becoming the normal. It's 89, 90, that sort of time. So some of his right time, right place. You know, I was quite interested in computers even from a kid. I used to sell computer games when I was 13, 82, 83, that sort of time.
Right.
And so I was always interested in those things. And then I was interested in business as well because we were from a modest family and I wanted to learn how do you make money? How do we have nice things? Why is it we can't have nice things? So that always inspired me. And then when at university, just the two things merged. It's a case of the interest in computers and business. It kind of, a computer business makes sense, right? So that's how it started. And at the beginning, it was just really putting computers on the desk of solicitors, accountants, schools, because they just had word processors. We were taking the word processors off and putting a computer on the desk, and that was it. It evolved into starting to install networks and servers and connecting the computers and some telephony as well. And so it just evolved in that way. And that was a nice business. But I think, at the time I was very ambitious, very driven. I was very money motivated.
How old were you when you started?
I was probably 20 something.
Wow.
Maybe 21, that sort of age. So I was very, very money motivated at that time. That was really what was the objective. And now when I look back, I think that's probably what led to some of the problems. And so when there was an opportunity to grow even bigger, to wholesale and sell equipment, we started doing that. But the margins were wafer thin, really tiny margins on that business. And although the other business was very profitable, services, maintenance, support, very high profit margins, this side of the business was very thin margins, but the turnovers in millions. You think, we're in a multi-million pound business, but
Right.
the margins are really, really tiny. And then when you have returns and repairs and things like that to deal with, that just caused enormous problems. And the challenge with that was then, really ultimately that I'd end up running a business in a bad way because this side of the business was really funding this side was losing money heavily, this was making money, and I'd put everything into it by then because it was like a sinking ship and you don't want it to sink. It's your first baby, you think I'm not going to let it go, and the reality is the thing whole imploded, and I was at a point that was it. I kind of lost everything really and started from zero.
Wow. You know what you mentioned about turnover and profit? There's a very interesting book I've read. It's called Profit First.
Yes.
And it talks about removing the profit that you see because people do confuse sometimes when they see a lot of money in their account, they think they can just spend off it. But that's not profit. So
Absolutely,
it
yeah.
is too. So you mentioned from a young age. So I presume when you were younger, you had a lot of business, small ventures that you went through. Is that so?
I've had my fingers in lots and lots of businesses. I mean, my main businesses is really being tech and then property. That's really been my main business. But in between, I must have done 20 other different things. Got my finger in that pie, my finger in that pie.
Yeah.
And I've always done lots of partnerships as well, which is really how the property business grew as well. I always like the idea of working with other people. So, you can achieve much more, two brains together than one on its own. And so that's always been something very interesting for me.
What about as a little child between the age of, 5 to 15? Any ventures then?
I mean, probably I think 12, 13 when really my entrepreneurial brain started switching on. Before that, there wasn't really anything there in that way. There probably wasn't anything going on in there anyway. I was too busy as a kid. But really, it's 12, 13, and I wanted a computer at that time, and it was the ZX Spectrum, the Commodore 64, that era. This is, most people probably watching may not even know what I'm talking about. I'm talking about 1980s at that time. And the amount of money for that computer was more than my dad's salary for a month. Do you know what I mean? It wasn't possible to be able to afford to buy something like that. It just wasn't possible. Wow. So I was trying to save money, do little bits, birthday money and Eid money, whatever little gifts, bits and pieces I could get to try and save up and buy this computer. But when I bought the computer, it was basically a box with a keyboard and that's it. that means you actually can't do anything with it. You need a screen to connect it to, which was separate.
Course.
Then you needed a data input device like a CD drive, or it used to be cassettes in those days. So the whole thing didn't actually do much until you started buying all these other things. So what I started doing actually is I found a source to get computer games, and then I would sell the computer games in school and make a few pounds on that. And then by the time I left school, my computer equipment at home was more powerful than we had at school. So yeah, that's how it kind of.
Because I realized you can't just turn someone into an entrepreneur. I think it runs in the blood, maybe, or since as a child you want to become an entrepreneur.
I've thought about it quite a lot, and I think it's a bit of both. I think there has to be, because I think if I was a born entrepreneur from a kid, I was 5 years old, I was selling sweets. That wasn't the case. But then when I became, 12, 13, that sort of age, I started becoming more aware we can't afford these things. We can't afford these nice things. And I can't go on the school ski trip because we don't have the money to do that while all the other kids can, the rich kids can go. And that's when I become aware that actually it's unfair. Why can't we have this? And I think that's when I started thinking about how can I. So with the idea of, are you born with it, or does the environment create it? I think it's a bit of both. Yeah, and now I'm just a workaholic. I mean, if you said to me on Sunday at 9 o'clock we're doing this, I would have said, yeah, that's fine, because my brain's running all the time. It's not a problem.
You're productive now.
Now I'm more conscious of time. I try to be efficient, but I still work very, very hard, long hours, and we don't have to, because I can't switch off very easily.
That's amazing. I really respect that. I respect that. But why property then? When you lost the IT business, why property?
I think one thing that I was a big fan of, and I still am really, is a Sunday Times Rich List. So the first issue was, I think, 1989, something like that. They issued it, and I've got all the editions that I used to religiously get it, and I'd look through and I'd study it. This is, I'm talking a time there was no internet, there was no information. Information wasn't as easy to get as it is today. So I'd look at these once a year publications, look at all these people that are worth 2 million, 5 million, which today is probably like 200 million. And I think, how did they get so rich? And then you read they either sold businesses, and that's how they had a big liquidity event, or they keep money in property, or they make money in property. And that really association. And then also, from an Asian background, we'd always talk, I should buy property. And I never did. And I knew other relatives and friends I had. And also from the IT business, I had a lot of clients that would make money from property. So I had solicitors, accountants, doctors that I was doing work for. I setting up their computers and networks and stuff, and they'd also be investing in property as well. And so that's really what got me thinking about I should think about property. And also earlier to that, whilst we had the IT business, my wife and I, we purchased a property in South Birmingham, and it was for a home at the time. But we bought it for a modest amount. We didn't do very much to it, and within a period of 2 or 3 years, it'd gone up like about £80,000. And we sold it, we took all that money, put it in the IT business, it all went anyway.
Right.
But the point being that one house made more money with us doing nothing than us working hard every day. So I think it was a combination of all these things that got me thinking, property. But the biggest frustration or the challenge for me was, or the lack of belief on my side was, well, you need money to start, and I haven't got 2 pennies to rub together. How can I start a property business? But at that time, a lot of people used to talk about buying property, no money down. So when I started trying to learn a little bit and listen and watch other people, and there used to be a few forums, kind of internet was early, there was no Facebook, that people talk about no money down stuff. There's a couple of networking events I go to, and then I try and ask around, and people are buying property with no money. And then from there, I thought, that's it, I'm hooked. If there's a way to buy property and I don't need a lot of money, then I'm in. Then we've got to find a way to do this. And really, I also felt, I was in my mid-30s, I think then at the time, late 30s. At that time, I thought, there's no second chance. There's no other chance after this. This is my second chance. I've got to do something and build it and get it right.
You have to make it work.
I can't. Failure is not an option. I had that written on my wall of my computer. Failure is not an option. And so then I felt, what? If I'm going to do that, I have to make it work, regardless of what it takes. I'm going to make it work. Yeah. And that's really how it started. It was that hunger to find a way.
It's interesting when you say that you don't have a backup. I read this in a book, I think is it Think and Grow Rich, that there was this general that were going for a war somewhere, and the guys where the ships were landing shore, they were in this belief that they're not going to make it, they're going to lose. Yeah. And the general didn't want that because they were outnumbered. So what this guy did, as they came onto shore, he burnt the ships.
Yes.
And he said, now there's no way to go
There's
back
no
home.
going back, yeah.
If you want to go back home, you got to beat those guys and then go back home. So I think that's it. So I think when you say failure is not an option, you find ways to make it work.
Yeah. And I think it all stems from how important something is. You know, reality is we all have the same 24 hours in the day as the most successful people, the richest people, presidents of the most powerful countries, you know, to somebody who's answering the phone at reception. They all have the same 24 hours. Yes. But what do we choose to do with those 24 hours? How do we use them and utilize them? And I think is the important thing. So it's how we prioritize things. Yeah. So for me, at that stage of priority was, I've got to sort out my finances. I've got to be able to, like, you know, sort out my life and at kids. I've got 4 kids now, mashallah, and they, at that point, my youngest, I think, my youngest was either just born or being born, I can't remember exactly now. And it was that sort of time. And I think I've got to sort this. I can't, you know, make a mess of this for them. I've got to make sure that, you know, something I'm building that will outlast me. And property is the only thing I could think of that will still be there when I'm gone. You
know, that's what I like about property. You can see it, you can touch it, you can feel it. You get the monthly income from it, and you just wait, enjoy the capital, the rental income you get while the property prices appreciate. Yeah. So I know it's difficult to get started because I've been there as well to get started. How long did you have to go through those obstacles until you had your breakthrough?
I think, you know, I learned the trial and terror way. So by just trying to figure stuff out. But actually it probably took me about 2.5 years before I really made my first even £1 in property.
2.5 years?
About 2.5 years. And that was because when I look back now, I made so many mistakes because I was trying to learn all these different techniques and strategies. You know, I go to a networking event and somebody's there saying, look, you know, I do HMOs and I make £1,000 from one house, and I'm thinking, £1,000. If I had 2 of those, my life, I'm a millionaire.
Wow.
2 of those. Yeah. You know, I'm thinking, my life would be changed. You know, how can I do that? And I think I've got to learn about HMOs, and I'm off looking at how does it work and studying it and trying to talk to people who are doing this. And then the next month I'm going along and somebody's saying, oh, you know, you can buy a house for £1. I'm thinking, forget HMOs. You know, I've got 10 quid, I can buy 10 houses. And so I was just constantly distracted. And, you know, the month after somebody's talking about no money down, I'm thinking, oh, forget £1. I'm now buying houses for free. I was just really, you know, I joke about it now, but I was just jumping around all different things. There was no focus. There was no total commitment into one thing. I was just trying this, trying that. The one thing that did happen when I look back now, I built an enormous amount of knowledge in different strategies and techniques, but I wasn't getting the results. I was building all this theory and understanding, but not quite getting the results. And really shift happened when I did have somebody that, you know, became my mentor for a number of years, who achieved the results and says, look, you know what, just first thing he said to me is stop doing everything and put the blinkers on, just focus on one thing. And that one thing for me really was, I actually was very good at sitting down, talking to sellers, negotiating deals and stuff. But then I wasn't doing anything with them because I think I haven't got the money, I can't buy it. So I had all these leads, and he says, look, just start selling some of these leads and, you know, see what you can do with them. And that's what I started then doing. Then I just started sourcing deals, selling deals on £2,000, £3,000. And that's really where I first started making money.
But 2.5 years, that's long. It drains someone, and a lot of people would have given up.
Actually, my wife said to me many times, you know what, I'd come back all excited and energized because, you know, sometimes you go and listen and you're inspired, you energize. I said, oh, babe, we're going to be doing this, and this time next year we're going to be millionaires. And she's thinking, you know, just join some mad, crazy group or something. And,
but you have to be optimistic. Otherwise, it doesn't work. It drains you out and you give up then.
And this is where I said, you know, the priority has to be high enough, because when you hit those low points, you've got to think, no, I have to do it because of. And sometimes, you know, we'll do stuff more for other people we love than we'll do for ourselves. And I'm looking at my kids, I'm thinking, I want them to have a better life. I want them to have stuff that I didn't have. And that inspired me, kept me going forward and driving me forward.
Right. So how long did it take? Say you had your first breakthrough, you go into property 2.5 years later. How long did it take until you got your real money to bring back home?
Well, I started making money then after about 2.5 years, but it probably was, I think, about 1.5 years. By then I'd bought just under £1 million of property by that time. And that really happened because as I was sourcing deals, I was selling deals to people and stuff. And I had one deal that I was struggling to sell. It was someone getting repossessed, and we'd been talking for quite a while, and he was getting to the point where the property was going to get repossessed. And I had somebody who'd bought deals from me before, and I was trying to get him to buy this property. And I said, look, you know, it's a good deal, but he wasn't really comfortable with my numbers. That was the issue. And in the end, essentially what we did, and I said to him, you know what, look, you buy this property. This is the guy I'd sell some deals to. I said, you buy the property. It will mean that the guy who's about to lose his property won't lose his home. You know, he'll have some money. He'll go away and make a fresh start. You'll end up with a good deal. And okay, I won't earn a fee out of it, but what I will do is I'll deliver on the numbers that I'm saying it will work, i.e. how much rent you're going to be able to get, how much it's going to cost to rectify the property. So there wasn't really much. We were only talking about a few £1,000s of work.
No, but I'm talking about when you made real money, like you looking at 50, 100 grand, your first deal.
Oh, right.
That
Wow.
literally changed your life.
Yeah. So life-changing money, I think. That probably took a few years.
How many years
Yeah.
did you say?
Man, I have to think about it now. I think probably when we started flipping property, that's when we were making like 15, 20 grand at a time. Then it just got bigger and bigger amounts.
No, because I'm just trying to set the expectation. A lot of people think you join property, a year into it, you could be a millionaire.
Yeah.
Because there are a lot of people who sell this idea.
Yeah. And you know, the thing is with property is you can start property with no money. It is very, very hard to do, but it is possible. You know, I'm here, that's what I did, that's the route I followed. And then somebody next to me could be starting with a reasonable amount of money, or they've got money from other people or whatever. Now they're going to get results much faster than me, than starting from where I am, because I've got a much more tougher journey than them. So, you know, if you've got some money around you, it definitely is easier. There's no doubt about that. I think the biggest mistake people make when they get started in property is that they look at what somebody else is doing and I think, I want to be like that, or that's what I want. Ultimately, I think we should be thinking about is, what is it that they want to achieve? I.e., you know, I talk about you either have cash flow, or you're cashing out of deals, or you're building equity. That's your three things. That's your three ways to profit from property. So if you're building cash flow, that means you're building an income each month. You want a certain amount of income coming in. If you're cashing out, that means you just want chunks of cash, buying, selling, flipping. And if you're building equities like buy to let, you're building long-term wealth. Sometimes there's a little bit of overlap, but generally people get into it for one of those three reasons. So I said, once you're clear which way you want to go, then it's working out. It's like almost you're doing a SWOT analysis on yourself, your strengths, weaknesses, opportunities, threats. You think, what are the things I'm good at? What contacts, connections do I have? How much money, time do I have? Based on that, which strategy would suit me to get to this goal? And I think that's the biggest mistake where I see people making. They don't go through that exercise. They don't work out why they want to invest in property, i.e. what type of income they want. They don't think about what's going to suit them and then follow that path. And then it's just staying focused on that. And those that do that, I think, see the best results. So then we come back down to where when we're starting. So if you're starting with small amount of money, for example, let's say you're looking at one of the rent-to-rent type routes, rent to HMO, rent to service accommodation. You know, the market is now much more mature than it was when we were first doing rent to rent. So I was teaching rent to rent probably 8 years ago. I was running courses on rent to rent then, and then we'd ring up the letting agent in the training session, and we'd explain we're looking for a guaranteed rent. And nobody was talking about rent to rent at that time. I'm not saying we invented it, but I'm saying at that time when we were teaching it wasn't that mature. Now, if you rang an agent up, we rang an agent now, he says, oh, look, you know, we're offering a guaranteed rent, long term. Do you think landlord? Oh, you mean rent to rent? Because the market's moved on.
Yeah.
So we have to understand where is what I call the low hanging fruit. Where's the easy pickings? Why go the hard way? Look at the easy pickings. So if you're looking at rent to rent, rather than thinking, right, I'm going to go to the letting agents, I'm going to try and get my properties from there like everybody else is. You have to think about, who do I know that's friends, family that has property that I could maybe talk to.
Your circle, basically, your network.
Absolutely, your network and your network's network. Yeah, like LinkedIn, for example, they say you're not connected to just your immediate contact, but their contacts. It's the same thing. Who's your second degree connection?
So coming to that then, yeah, because I've learned this thing in real estate, that it's your network that is super important.
Yes.
It's who you know in this game and how you can work with each other, right? Now, you're a very resourceful man. So where does one start to build those networks with people you don't know? What do you do?
Well, I'll tell you how I started, and anybody can copy this model. So I've been running networking events for more than 10 years now, every month. And when I started, we had a Birmingham Property Investors Curry Night. Basically, it was, look, I'm going for a curry. Anybody interested in joining me for a curry wants to talk about property. So you just ask a few people who'll come along, and it was 5, 6 of us initially sitting around having a chat, then grew a little bit. Then I moved to the formal events in the hotels and stuff. And it's hard work getting people there. But what you do, you create an environment where people want to come and network and meet people. And then it doesn't become so hard because people want to come and connect. It's not that they're coming necessarily to see me or meet me. It's that I've created an environment where people want to come and meet and network other people. But at the beginning, we don't have that. So it's social media now has made it so much more easier than it ever was. You know, you'll be people that you'll be connected with on various different platforms you can reach out to. get a handful of people together. Just say, you're having a property chat, for example. It could even be at home, it could be in a cafe or whatever it might be. You invite 10, 12 people and start talking about property. And then you repeat it the following month. You ask them to let somebody else know. And it's very easy to grow a network.
Sorry to interrupt, but see, today, there are a lot of networking events out there already in social media, like you mentioned. But if you were to visit them, a lot of people on there, majority of the people who try to be there, are ones who perhaps don't know anything about property and are trying to learn and understand. That's why they're there, which is a very good thing. But someone who's already on the property ladder and now wants to meet people who are also already on the property ladder, don't you think that in social media, those events somehow turn out not to be very valuable to someone perhaps like yourself?
It can be, and I still actively go to networking events. In fact, I did one this week. I don't do loads, but I did one this week that I was at, other than our own ones that we run. So, for example, in our events, what I try and do, our networking events, is there'll be a good group of people there that have no property investing experience. They're there for the first time. They're trying to understand, do I want to do this? What is this all about? They're very early in their journey. They're brand new. Then there'll be a portion of people who already taken the first steps. They've got one property, 2, 3, or kind of that sort of category. It might be they're an accidental landlord. It might be they've done their first deal. They're just getting started. And then there's people that are very experienced. A small group of very experienced people. So the 3 groups that I find will come to our networking events because there's something for everybody. Now, there'll be some events which are purely targeted people that are brand new.
So is there a way you differentiate, because you say your time is so precious, you're a busy person, you want it to be resourceful. So how do you differentiate before going to the event, knowing that is this going to be worth my time?
If you're gonna vet an event beforehand, then there's a number of things I would do. But I probably wouldn't vet them. Let's say we're in Birmingham. There's probably, I don't know, property networking events, 4, 5, 6 maybe in Birmingham that happen every month. And so if you wanted to say network in Birmingham, I wouldn't say, well, let me investigate that one, should I find out about that? I'd just go to all 6. What have you got to lose? You're going to meet people, and then you can make a decision that way. But let's say you were going to vet them. Let's say I'm based in London, I'm thinking of investing in Manchester, and I'm thinking, well, I don't want to be going to any events. I want to try and find and be resourceful and efficient with my time. So what I would do, I'd look up the event. I'd try and find out who the host of that event is, and I'd reach out to them on social media and see if I can get a call with them to talk to them about, tell me what type of people come to your event, what's the event format like, what's the outcome that normally expect for people. I mean, one of my favorite questions is what the outcome. I said to you earlier on, what's the outcome? Because I always start with where are we heading before we start. And just like with the property investing, when you start to get right, where are we getting to before we start, so we can work out what's the right route to get there. And then, you can see that experience of that individual, the type of people that normally come to that event, and then you make a decision. The other advantage of that is there's one person in the room that will be more networked and more connected than anybody else. And that's the host, because they tend to meet most of the people. So if you've already spoken to the host, you've already spoken to the person who knows most of the people in the room. So if you have a certain outcome, I'm looking to raise money, I'm looking to find deals, I'm looking to sell deals, I'm looking for a fund, whatever it might be, you can say to the host, this is what I'm looking to get out from attending your event. Do you think it will be beneficial for me? And let's say they say yes, and then say, who could you connect me to when I come that might be beneficial for me? Do you see? So now you've shortcut your process. So when you're there, you meet the host. And let's say you're traveling further, from London to Manchester, whatever, then I'll try and go early and try and meet a couple other people. I'll try and meet for a couple of coffees beforehand. So you're making it more productive the time that you are there, and then get the host to introduce you to people as well. And also, don't just accept that because you've had one introduction that's the person you should do X, Y, Z with, but use it as a connection, a contact for you to then decide maybe that's one of many people I might explore working with. For example, if someone recommends a builder, you don't just say, great, I'll just give you the job and that's it. That might be one of many you consider. You still need to do your due diligence. Do I want to work with them? But in a city where there's lots of events, I'd encourage you to go to all of them, and not just property ones I'm talking about, like business ones as well. So we said there's maybe 5, 6 property ones in Birmingham. There's probably about another 10 business ones, and so you should try and connect to people, because property is, for me, it's just a form of business. And so we should be connecting with business people as well. There'll be people that have property, want to sell property, want to buy property, want to invest in property, in business networks that are not necessarily coming to property networks.
So how many events would you encourage someone to visit in a month?
I'll tell you at the beginning what I was doing. Again, probably 3-4 nights a week, I was out at networking events.
Right.
Yeah, I was traveling all up and down the country. And then over time, as my experience grew and I was helping other people, then I started speaking. Then I was speaking at events all around the country, like 2-3 times a week up and down the country as well. And you do get burnt out doing that. But actually, if you've got a clear purpose of what you're trying to achieve, then it's much more meaningful. That I think a mistake many people make, those that are a bit more experienced, I have done a little bit of property, for them it just becomes a social evening. Oh, I'm going to go to the property a networking event today or a property meet. And what they're doing, they're just going to catch up with friends.
Yeah.
They're not actually going to do any business, they just catch up with friends. Really, you should be focused. You're going to the event, you think my outcome is I'm looking for a property where I can invest or buy something up to 250 grand in South Birmingham, for example. Let's say that's my objective. Then I'm going around, I'm talking to people, I'm saying, hey, tell me what you do. What is it, again, my favorite question, what's a good outcome from this evening for you?
You're going there with a purpose.
Absolutely.
So how do you source your deals then? Because how do you
So in terms of sourcing, my network is definitely a big contributor towards what we do, in the sense that have a very large network. So there's always conversations going on about stuff. So that tends to be one core way. We then also have some agents that will bring us some stuff, and over the last couple of years that hasn't been great because markets, we were saying, it's been really buoyant and strong, so there hasn't been a lot of stuff coming around, so we've not done as much maybe over the last 2 years, over the previous years we'd been doing. And then also we do direct to vendor marketing as well, mostly for sites, development, land, stuff like that we look for. So that's kind of our way. So we have one person in the office doing outbound stuff all the time, and we have other people bringing bits and pieces to us, and then we just appraise it. Most of we just dismiss very quickly in the bin. Yeah. So that's what I do. But if I was starting out now and I was looking for deals, I'd be clear and define what a deal means first of all to me. Then I would just be putting it out to everybody. That's what I'm doing, and I'd be happily say, look, I'm willing to pay a finder's fee, I'm willing to pay sources fee, because then you're getting people's attention and say, okay, because that's what you want. You want people to bring stuff to you, and you just build the fee in as part of the deal. And people sometimes say to me, you pay fees, how much do you pay? And we paid like 15, 20, 25 grand even on buying a deal. People think you pay 25 grand for somebody to give you a deal. I say, you don't understand how much money we make from that deal. Do you see? We're making way more than that. So that 25 grand just it's insignificant.
How many projects did you do in 2022? Say refurb, developments.
2020 we haven't done many. I think probably 6 or 7 is what we've been working on. Way less than what we've been doing before. Mostly what I was doing in 2022 was we have flip stuff, and I was trying to just get them all sold, because summer last year, my concern was the signs that the market's going to start slowing or it could fall. And if that happens, and if we're trying to flip property, what will happen is we're going to take way longer to sell them, and we're probably not going to achieve our figures. So I was trying to do creative stuff to get all our properties sold, the ones that we want shifted. And so, for example, one of the things I was doing, I would do completion races. So what that means is, let's say we got the house ready, and when I'm doing a flip, what I try and do is I make the house look stunning. Because my view is, look, somebody's going to come in to buy that house, most probably as their home. They're going to be there 10 minutes, if that, and they're going to make the biggest buying decision of their life within those few minutes. Cool. So you've got to make it look nice, and for them to go, wow, I can see the sofa going here, the kids are going to be playing there, I'm going to cook. You want them to feel that, and feel that this is something that they
So you're selling the lifestyle there.
Absolutely. We don't really stage the properties as such, but we try and do it in a way that the house is really appealing. And then we price it in a way that's attractive compared to everything else. So we don't price it right at the top. We price it maybe slightly less. So when you compare it to the others, you think this is probably the nicest house, but it's less expensive than the others. So that then creates a lot of interest.
But if you're buying a property to refurb and then sell it off, if you were stuck in a bridge and it took a long time to sell, it puts someone in a sticky situation, isn't it? So do you use bridging loans when you do this?
We don't use bridging. We use private finance. So basically private investors, they're investing with us. That's how we tend to buy more stuff with cash, with private money.
So you don't touch bridges at all?
It's not that we've never used bridging. We have done, but that's not our preference. Our preference is to use private money.
Why so?
It's much more flexible. It's relationship based as well. So let's say, for example, with a bridge, you're on a bridge, you're 8 months in, and there's some problems. You've got to renegotiate the deal. You might have to pay more fees, and sometimes, I'm not saying all bridges, but it's not always easy to renegotiate that position. You're in a weaker position. But when you're with an investor, it's they're working with you long term. If someone's going to take a month over or 2 months, it's generally not an issue, particularly if that investment is long-term investment, or if they do need that money, you've got flexibility, maybe find some other funds to replace them and you know, to take that money out. So, and for me, a lot of stuff is about relationships. So, you know, I prefer building relationships with individuals like that rather than a company. So that's why we tend not to use bridging. And then the completion rates, the way I was explained to you, the way we tend to do that, let's say we list it, the property, and then we get loads of people that want it. So for example, let's say the property is worth 290, we list it at 280, yeah? And then what I'll do is I get 5 people that are interested in it, and I'll say to them, I'll sell it to you for 275. Did I say 275? I forgot my numbers now. Let's say it was 290, 280 we list it at, 275 I say we'll accept, but it will be a race, the first person to complete it at 275. So generally we'll only put like maybe 3 people into a race. So they fully understand that 2 of them are going to lose out. They're not going to get the property.
So do you take an undertaking from them, or do you just leave it to legal surveyors?
You leave it to them. So I tell the solicitor, these 3 people want to buy, send 3 contracts. Yeah.
Okay.
Answer the inquiries, whatever. I've got to pay 3 lots of solicitors' fees.
Of course you do.
He's dealing with 3 buyers. But the first one that's ready to exchange contracts with them. And the other 2 lose out. Now, it's not very nice.
You're spending $3,000, worst case.
It's very clear what I'm doing. I'm being completely transparent. And the reason I'm doing that is because I want to sell fast.
I like that idea.
I don't want to be in a risk, you know, 2 months down. Because let's say in summer I was trying to sell last year when I was selling a few properties. And let's say I had a buyer and that buyer took 2-3 months and then the interest rates changed. Well, none of us were expecting that. The rates started changing, mortgage rates started going up. And what would happen? After 3 months, the buyer might pull out and say, oh, you know, my mortgage rate's changed now, or I'm not sure, the market's changed, I've changed my mind. There's nothing I can do as a seller. They've changed their mind. So then I go back to the market again. Now it's probably October, September, maybe even November, not a great time to go into the market. So then I've got to find a new buyer now again. So then I list, they take another 2-3 months. Now I'm into 2023. And I was thinking at that time, I don't want to take that risk. I want this property gone within a month. Do you see? So it's really creating a frenzy of interest and then explaining, look, this is the way we're going to do it. Most people will say, most people say I want to do it. Then I say, go and speak to your solicitor and go and speak to your broker. They put them off, which is fine because they don't want to get into a race. And then the 2 or 3 that do, you know they're eager, they're keen, they'll get it done. And for us, it's good because it means we're out the deal fast.
That's a really good idea because I have seen so many sales fall through and 4 months wasted. So this really works well.
And as a seller, it's really frustrating, and particularly if you're on a bridge and you've got time commitments, you want to get off the bridge quickly. That's way too.
So earlier we mentioned, you say a lot of properties you do flip, you sell them on, especially houses, but some you keep. Which ones is it that you keep then?
So we're only interested in keeping what we call high yielding. So things that are going to produce a really high income for us. So that tends to be our HMOs, which are kind of a fairly high-end HMOs, and service accommodation. So might be a block of say 5 flats or something, or 8 flats. That kind of thing we would keep in our portfolio because they're high yielding. They produce a really high income for us. That's the only thing we're interested in keeping.
I think you also mitigate the risks in there because your whole source of income on that house is dependent on just one guy. If he loses his job, it's a bad situation. But HMOs, it's a bit safer.
We have some properties in our portfolio that are single lets, flats and houses and stuff. But, you know, we've been doing this 15, 16 years now. And over the time, you pick up stuff. And then sometimes you look back and think, why on earth did we buy that one? Or, you know, that seemed like a good deal at the time. And look back now, maybe it wasn't such a great deal. But you learn as you progress. And the first deal you do is never going to be your best deal. That's going to be the first deal you do. So we have a few properties, but we don't actively look to keep single lets. We're not interested in keeping single lets.
So how do you manage these projects then? Conversions, refurbs, etc. How do you manage them?
So we have a couple of building teams that are really good, which is, I was saying earlier off camera that one of the biggest challenges in this business is finding good builders. So we have a couple of teams we have really good relationships with. And sometimes, you know, we'll go out to the market for other stuff as well that we need doing. But we try and contain a lot of stuff between them. There's been many times we've gone out and had other people involved in projects as well. But because we've got really good relations with them, it means we can literally just give them the keys and say, here, this is what we need, get on with it. And they've done so many projects for us, they know exactly what we want. But that's been years of kind of working together. So if someone watching this right now for the first time might be thinking, how could they do that? I would say really when it comes to a builder, you need to take the time to try and find somebody that might be right, and maybe try them on smaller projects if you can before giving them a big project. Sometimes you can't, you've got a project and you just need to find a builder to do it. In which case I would just ask around, networking again, look at their work, And we've got burnt a number of times. Even a couple of years ago on a new build project, I had the builder went bust and messed up for us, and then we had to go in and finish the project ourselves and stuff as well. So it happens. We make mistakes as well, but picking the right builder is like a key partner in your team.
It is.
To make it work. So having good builders, and then also I was saying to you earlier off camera as well, we've got lots of different property businesses, and the way is having key people in each of those businesses that really are running and managing those businesses. They're kind of like almost like my partners in the businesses, and that means that I'm not so we've got about 24 staff. They're not reporting all directly to me. Right. Which would be a nightmare.
It would be a nightmare.
I would not enjoy that.
Yeah. So with these builders, when you find a good one, you just give them more jobs, keep them busy with you, and build relationships from there.
That still works for me now today. I think it's at least 12, if not 13 years. He's been working for me pretty much full time.
So he takes jobs off you, but he owns his own company, is it? Or have you part?
He's got his own company, so we don't employ him, but basically we give him so much work. They don't do anything else. They don't take on any work from anybody because we've got such a good relationship now. We've been working together so long that we have more than enough to keep them busy all the time.
Right.
And that's the ideal position. But it's not easy to get to that. You have to build up to that.
Takes time. Another thing we were talking off camera before was about having debt in the company and a lot of debt piling up. I'd be interested to see your view on the matter. Say if you're building a portfolio of hundreds of millions of pounds, knowing that one day you are going to go and you're going to pass that debt on to someone else in the family, does that worry you at all? Say if you're leaving behind £100 million property for portfolio with a £70 million debt on it, does that worry you at all? Or if there's any other investor out there who's looking to do this but is considering that about what he leaves behind, what would you say to them?
So people have different views on debt, and so my view is, so we've used debt in the business and we still do today, but we also do a lot of stuff where there's no debt, i.e. there's no borrowing, it's just partnerships. And ultimately what I'd like to do, and mostly for religious reasons, I'd like to get to a point where I just don't have any interest in any of our businesses. So my aspiration has been we're growing, and then we downsize.
Remove all the debt.
We've removed debt. That's my objective, and that's just my personal objective. I'm not saying that's a strategy that necessarily.
So that's what you want to leave behind for your family.
Yeah, so I don't want to leave any debt. That's what I'd like to get to, and a lot of my family are involved. When I say a lot of my family, my wife, my daughter, my two sons, they're involved in our business, but they have their own businesses as well. So it's not they work for me. I've set up various businesses, so they're doing their own property stuff as well.
So this is quite different to what Grant Cardone does. Of course, everyone does differently. Yeah. But what he does, what I heard in one of his interviews, he's got $2.8 billion worth real estate, but out of which $2 billion is the debt.
Yeah.
So what he's trading his kids is that if I go, you got to take care of the three things. You always have to make sure your tenants are paying you on time, keep them happy, and keep your lenders happy, maintain the property. That way the business flourishes on. Yes. So that's the kind of mindset he's leaving behind. $2 billion debt is quite...
I think, as I said, there's different views on debt. Let's say somebody wants to take on debt. And I heard this quote once, and I'm not 100% sure, and I think it was a Donald Trump quote. And he said something like, when he owed the bank, it was something like... it was like 50 million or something. When he owed the bank 50 million, no, I think it was like 5 million. When he owed the bank 5 million, he couldn't sleep at night. But when he owed the bank 500 million, it's the bank that couldn't sleep. You see, so the power shifts. So debt allows escalation, especially in property. You leverage, you can do if you're borrowing 75% from the bank, you've got more money to grow faster. And then if that is the mindset, then that's fine. You can keep scaling and keep growing. And that debt, if you're setting up in companies, even after you're gone, the debt is not yours, it's the company's. The company will still survive, as long as it's taken care of, it's got assets, it's got income there as well, it would continue. So for those thinking that way, yes, you can build that, but I think over leveraging is the risk that many people mistake they make. They borrow more than they can manage. And then if there's a slowing down in the market or a fall in the market, and let's say there's a negative equity situation, which happened 2007-8, which kind of when I was getting started that time, I used to see a lot of it. So that means people actually owe more to the bank than the value of the property. So they say the property's worth 100, the mortgage might be 105. So they're in negative equity. So they can't sell, because even if they do sell the house, they have to find £5,000 to give to the bank to be able to sell the house. And if people are in difficulty, they can't do it. And in the business world and the commercial world, if you start getting to that position, most banks will call in the loan because they say our money's at risk, we want the money back straight away, and they're not in a position to pay because most mortgage contracts will state they'll have a covenant. If the loan to value falls to a certain level, they'll just call their money back, and many people will not be in a position to pay that, so the bank will just pull the rug under their feet. And
that's a very bad situation to be in.
And there's, I've been in a fortunate position where I've met some very, very wealthy people. I'm talking hundreds of millions in terms of net worth, and much of that through property that they've created. And most of them, not all of them, most of them are quite resentful of banks. They don't like the banks.
That's true.
Yeah, and most of them have gone through that process, even if it's not for religious reasons, where they've got rid of a lot of the debt and have the portfolio that's debt free.
Yeah, it's just that sense of security.
Yeah.
Because like you said, it's true, they can just come knock on your door and say you're in negative equity, pay up.
Yeah, so the banks it's a risky game, and when I first started, a lot of the sourcing I was doing was people in financial difficulty, and at that time, 2008-9, it was a bloodbath because banks were calling in good loans for this reason. Wow. And I would see people that have got 20 property portfolio, never missed a payment, everything paid on time, and the bank just took all the properties off them. So
it seems to me that 75% loan to value, especially if somebody's scaling up to that level, might be playing on the thin line.
Well, 75 generally speaking is the norm in terms of the maximum. When I say the norm, is the most people will borrow at 75. Now, if you could borrow 90%, people would borrow 90. In 2006, 6, you could get 90, 95. In fact, you could get more than 100%. Northern Rock would do a mortgage at that time where they'd give you all the money to buy the house, 100%, and then give you a bit more. I tell you what, buy the house and buy yourself a car and go on holiday as well. That's what they were doing. And that's what created all of this problem, and the market imploded and crashed. That's what created the credit crunch, because everything was just over leveraged.
Yeah.
So leveraging can be useful, but it can be very risky as well.
As long as you know what you're doing,
yeah.
It can be good.
And obviously the lower the gearing, or the lower borrowing you have percentage-wise, is at 60 or 65% if you're borrowing, you're going to be safer than if you're borrowing at 75% or even 90%.
Yeah. So Saj, what's the best deal you've done so far?
Best deal? I don't think there's one best deal. There's a really nice deal that I like, which really demonstrates the time it takes in investing in the relationship. So there's a guy that had 3 flats. It was actually a block of 6, and his father had split it into 2, and the 2 sons had been given 3 each units. They fell out. They had all kinds of family problems going on. Yours is better than mine. Yours is bigger. This, that, and the other. They forget the point that their father had worked all their life to give them these, and then they were squabbling and fighting, and they fell out. And this guy wanted to sell, and I was talking to him. This probably ran for about a year. I was talking about buying. I said it doesn't quite work for me at that figure, and he wanted like 200 and something thousand for these 3 flats over in Dudley at the time. Eventually, to cut a long story short, I bought those 3 flats for 75,000, and they were worth like 200 plus thousand straight away. And they're all renovated. They didn't need any work doing. There's little bits of tiny repairs. Basically, the property's been renovated but left empty, and they hadn't completed them because they didn't want to start paying the council tax. So they just needed a couple of minor things doing. Building regs signed off, and it's finished. So that was a really nice deal.
What did you do? Sell it or
no, we still got them. Yeah. We just stick them on the portfolio.
Oh yeah, that's a good deal. Keep one.
Yeah. So with the example that I give is, it was investing the time with the seller, talking to him, say, look, this is what we can do, and they weren't interested. And over time, because I was there constantly having conversations with him every few weeks, how are you getting on with that? And I was trying to help him as well. And I said, look, if you don't want to sell to me, that's fine. Have you thought about this? Have you tried that? He tried the auction, he couldn't sell it because there were some issues with the titles as well. But I knew how to fix these problems. So in the end, he got to a point where he was really basically fighting with his brother, and he says, I'll tell you what, if you get this done and you get it done next week, we'll do it for this much. And it's like 110. I said, I can't do that. And we ended up, I said, I can give you 75 grand and get it cash next week. I actually didn't have the money, so I was like, okay, get on the phone, quick, start dying. Have you got some money?
Okay.
And because my view has always been, if you get good at finding really good deals, the money finds you. And it doesn't that you'll sit there with a good deal and the money will come running, but people need to know that you find good deals. That way you've got contacts, you can pick up the phone and start having conversations. Somebody said to me recently, there's a good deal they were doing, a really good deal. He said to me, Sad, you always said, like, if I find a good deal, the money comes to find me, because I've got this good deal and I can't find the money. I said, because you haven't done the work to line up the money. What I mean by that is that you've got to let people know that this is the kind of stuff you do. You're looking for these kind of deals. You build up some relationships. So when you've got that good deal, it's very easy to raise the money if that's what you want to do.
Right. So Saj, right now the base rate is now at what, 4%?
Yes.
What do you think is going to happen to the property market 2023, 2024?
It's really difficult to say. I mean, most predictions are wrong, but my gut feeling is that the house prices will slow down. They'll fall a little bit this year. I think we're already probably 5% less than maybe what we were, a year ago. I think the prices, even though some prices still be marked at a certain price, you can get a bit of movement on that property straight away. So the market's probably softened by about 5%. And I think, we might end up maybe 10, possibly 15% drop. That's what I think. I don't think we'll go further than that because I think there's still a lot of cash around as well. So people are still wanting to buy. I think mortgageability and affordability is becoming harder. And also with, the challenges in the market economically, it means people's priorities change. Moving house is no longer such a big priority, especially it's so expensive with mortgage rates as well. And then also you'll start seeing repossessions, unfortunately, will start to rise again. All these things will impact the market in a negative way, which means house prices will fall. But then having said that, if we think about what's happened over the last 2.5 years, well, house prices have probably gone up about 20%. So if they're taking a 5% or a 10% hit now, is that a crash or is that just a correction?
Yeah.
Basically, in a way, it's just really just a correction. It's not a crash. And I don't think a crash will happen because I don't think the government will allow a crash to happen. And when you look at during lockdown, as we were coming out of lockdown, the government wanted to stimulate the economy. And one of the biggest contributors into the economy is property and all the related industries and lettings, maintenance, building, construction, all these businesses related to property. So what did they do? They reduced stamp duty, put a stamp duty holiday on straight away and drove the market. So that didn't happen by accident. There was already a bit of an appetite for people reevaluating their lives. Maybe I don't want to live in a flat no more. Maybe I want to live in a nice house with a garden or something. And during lockdown, and there was all these things, and people hadn't really bought or sold houses, or they were interested in getting out. And then the government introduces the stamp duty holiday. What does that do? That adds fuel to the fire. You see, so the government really controls the market in that way, and they've really pushed up the price in this way. They maybe didn't expect it to go as high as it did, but they created that situation. 95% guaranteed mortgages, all these things they've done really to stimulate the property market. So I don't think they'll let the market crash because I think it's such a big contributor. But then I think the Bank of England is constantly pushing up rates because it's trying to control inflation at the same time. So you've got these two opposite forces, like the government and the Bank of England kind of pulling in opposite directions. So I don't think the market will crash, but I think it will slow down. But importantly, there'll be more deals, I think, to be done this year.
So with so much uncertainty, especially with the Bank of England, like you mentioned, lenders are not very happy to lend with good fixed interest rates unless it's going to be very high. So what should one person be doing now if they have a bit of cash, not enough to make a cash purchase, but at least enough to do a mortgage and then maybe on variable and then add value and then refinance? What would you say to them? Is that something they should do now or just wait it out?
Well, in terms of if you're borrowing money from the bank, also you have to consider that the banks now have built in a reasonable profit. So although the bank of base rate is 4%, mortgages are coming at 5, 6, 6.5, and some even commercial stuff at 7%. So they're built in quite a big margin. So even if let's say the rate's here and the bank of base rate, say if the rate rises, they don't have to move very much at the top because they've still got sufficient profit in the middle. So the banks, I think, are built in the profit. From a borrower's point of view, I think you have to look at individual circumstances. What would be right for you. If you've got a really good deal that you can do now, and even if it's costing you a little bit more, in the long run it's going to make you money. You have to evaluate whether that's the right thing for you. I think having a good independent whole of market mortgage broker is something that is important to help understand the products and what the right products are. And also what we're talking about is buying property. Well, one of the biggest opportunities I think that will be presented this year and possibly into next year as well will be controlling property by options and lease options. And I haven't really done much in terms of talking about options in the last few years, and I know other people have. And the main reason for that is because the circumstances have been wrong in the market, or let me rephrase that. The circumstances haven't been right for lease options to work really well. But now we are in those market conditions where those types of strategies will work really well. You don't need to put a huge amount of money down. Yes, if you've got money, you have an advantage, but you don't have to put a huge amount of money down to control property to make money from it.
So what is success to you then, and what's your vision?
Two different questions. So what's success? Success to me, I think, means just doing what I want when I want, and not having any financial worries from in a business sense point of view.
Are you content with who you are?
I am. I'm always, every day, I'm grateful for where we are and what we have, without a doubt. And I know the world could change very quickly. Everything could go on its head very quickly as well. So I'm massively grateful. In terms of content, I'd say I'm still very hungry. Yeah, I'm very hungry to build bigger businesses, to do more, to venture out into other things in property that we haven't yet done. So, I'm in my 50s, but I feel like I'm still in my 20s. I feel like, I've got the energy to, I just keep going. So I'm like Energizer Bunny. I've got no plans on stopping down or slowing. And people say to me, when are you going to retire? I said, retire and do what? Do you know what I mean? I'm loving what I'm doing. So I'm still very, very hungry. And I think, helping and serving other people as well for me is important. Trying to make a difference to other people's lives. And it's for many people as well. But one thing I learned a long time ago is that, if you're trying to make a difference in somebody else's life and help them financially, or there's friends, relatives, or somebody that you want to help, or, you want to support a charity, if you're struggling to support yourself, how can you make a massive difference in somebody else's life? If you're in a strong financial position yourself, you can make a way more difference to other people's lives. So that also drives me as well. I think, there's so many things that I see, and I think really, if there was the financial clout available, you could help in those things. That drives me as well a lot.
Well, what about your vision then? What's the next thing?
So the vision is Saj Towers in Birmingham. I'm joking.
Oh yeah, inshallah, one day.
I'm joking. I think, what I like to do is build something that works really well and then continue replicating it. So it's a case of you stay focused, you build one thing and you master that thing. So like, for example, HMO, service accommodation, flipping. We think we've got nice models for that and we can carry on doing more and more of those. But other stuff we want to do, like we've done some development, new build stuff, we want to do more new build stuff. We want to do much more stuff with land in terms of getting approval for planning on land. We're very keen to get more involved in that. Hotels, smaller hotels, those sort of things we're interested in doing. So these are more kind of like goals for the next few years as opposed to a bigger vision. I guess I don't think about 20, 30 years ahead. I just think about, we enjoy what we're doing and I want us to see us do more of what we're doing.
So you keep a target and you chase the target.
Yes, yeah. And another thing I learned a long time ago is success is not a destination, it's a journey. So you have to enjoy the process. Don't wait till you get there and think, okay, this is it, I've made it now. No, you enjoy the journey as you're going along, enjoy what you do, and it's not that when I get there then I'm going to be happy. Enjoy the process and be happy along the way.
I love that. So just to wrap up, one final question. How important do you think personal development is for someone to succeed in this property business?
I think personal development is massively important in any aspect of life, not just property. If you want to succeed at anything, you have to have a clear goal of what you want to try and do, and then you need to learn a way. How do I get there? And then we should look around and look at who's achieved the most, who's the pinnacle of that thing. What can we learn from that person? Yeah. If we're thinking about, okay, I want to build a phenomenal tower in Birmingham city centre. I want to build the tallest building. And I think, well, how are we going to do that? Have other people done it? Yeah, they have. They've built giant buildings. It is possible. So, first it helps us it gives us belief when we see other people, massively successful people doing it. And when we're on a journey, like an entrepreneurial journey, whether it's property or anything else, there's massive ups and downs. It's like a roller coaster. Some days you're on a high and everything's just fantastic. Other days you're like, crying in bed with the quilt and say, leave me alone. I don't even want to get out of bed, because that's just the life of an entrepreneur.
The reality of it.
You have that. And And what keeps you going is that the goal, the vision, and then when we see other people inspiring people, makes a massive difference. So I've in my early days I learned a lot from Brian Tracy. I'm a big fan of Brian Tracy's, and his methodology on productivity, on sales, on psychology and stuff, and that had a big impact on me. And at the beginning, when I first started, a bit of a story, when I first started in business, you realize quickly it's actually quite lonely. That especially when you start employing staff, you have challenges and problems and issues in a business. You can't discuss them with your staff. It's a lonely space at the top. Whether it's an empire of 2 people or 2,000 people, it's a lonely space at the top. And then when there's other like-minded people you can share stuff with, it makes a huge, huge difference. And at the beginning, I was very focused, very driven, and then I couldn't understand why other people weren't. But I'd never really gone to work for anybody else to know what the mindset of, say, an employee was, versus, well, I've got to put food on the table because nobody else is going to do it. If I don't work, there's nothing to eat, because that was the mindset. And then understanding, actually, because of the environment people come through, it's almost that thought process gets taken away from them. And then it's a fear of, well, if I don't have my salary coming in, how I'm going to pay the mortgage and this, that, and the other. And as an entrepreneur, you kind of, you fight and find a way. And I think personal development massively helps in that.
Amazing. Saj, thank you so much for joining us here today. It's been super useful. Really appreciate you.
Much appreciated. Thanks so much.
Guys, if you haven't already, please make sure to follow Saj Hussain. He is a successful business entrepreneur, as you can already tell. Very humble as well, and can be your mentor. So be sure to follow him. I hope you've enjoyed this content. If you have, please do like, subscribe, and hit the notification bell. And we'll see you in the next one.